Hello and welcome to this video on Auto Enrolment. My name is Steve Power and I'm one of the product specialists here at Pegasus Software. This is a two-part video. The first part will be an introduction into Auto Enrolment, where we will go through and we will discuss the new duties that apply to employers, and we'll look at where you get more information about Auto Enrolment and the rules behind Auto Enrolment. The second part of this video will be operating Auto Enrolment within Opera 3. So we'll assume that you've reached your staging date and we'll activate Auto Enrolment within Opera 3, and we'll see exactly how to process from your staging date through to auto enrolling workers into pensions. We also integrate into the Nest and into the Now pensions, and we'll also discuss that integration. So what is Auto Enrolment? Auto Enrolment is basically new pensions law that came into force in October of 2012, but it was only for the largest of employers. So in October 2012, it was for companies that had more than 120,000 employees. By the time we got to April of 2013, it had dropped down to smaller companies, i.e. those that had between 6 and 10,000 employees. By the time we got to April 2014, it was for companies that had between 160 and 249 employees. And by the time we get to April 2015, it will be for companies that had between 50 and 53 employees. So you can see as time goes by, more and more companies will be auto-enrolling their workers into pension schemes. Basically, employers are legally obliged to enrol certain workers into something called qualifying pension schemes. So within this video, we'll have a look at and identify what is a qualifying pension scheme. Both employers and employees will make payments into those pension schemes, and there are set rules into handing those contributions across through to the pension provider. And of course, if you're putting workers into pension schemes, you have to inform workers about it. So there's a set process of information that needs to flow through to those particular workers, and we'll have a look at that in operation. So how will this be implemented? Basically, there's 8 steps you need to be aware of. The first one is to nominate a point of contact at the pensions regulator. You don't have to do this, but there are some benefits to you if you do so, and we'll explore those. You need to know your staging date, and you need to go through and assess your workforce into a number of categories. You need to make sure that you've got a pension in place in which those workers can be auto-enrolled into, and of course you need to tell your workers that this is happening. At and around your staging date, you need to go through and you need to automatically enrol eligible job holders into workplace pensions. And within 5 months of your staging date, you need to register with the pensions regulator to tell them that you have done so. And of course, both you and your workers need to contribute into those pensions. So let's look at each of these one by one. Nominating a point of contact at the pensions regulator. If you go onto the pensions regulator, which is tpr.gov.uk, and go into the Auto Enrol Nominate, this will allow you to go through and nominate a point of contact within your company. 12 months from your staging date and 3 months from your staging date, the pensions regulator will send you a letter advising you of the fact that you need to auto enrol. That letter has a unique letter code that identifies your company. You can go through and you can enter that letter code here on the pensions regulator website, enter the name of your organisation, then it allows you to go through and describe who it is that is the point of contact, and you give the details such as their email address and what have you. The advantage of doing this is that the pensions regulator will give you countdown emails. So when, for instance, you're 9 months out from your staging date, they will give you certain bits of information. When you're 6 months out, they'll give you additional information, and when you're 3 months out, they'll give you more information. So in other words, it's a prompt to you as to where you should be within the auto-enrolment process. Knowing your staging date. The staging date is the date at which the law applies to you. So the staging date is based upon the number of employees you had within your organisation back in April of 2012. And here is a list from the pensions regulator website of the staging dates. So earlier I said that it started in the beginning of October 2012, and that was for companies that had 120,000 or more employees. By the time we got to January of this year, that was for companies that had between 350 and 499 employees. And so on and so on and so on. So as we get through to August of 2014, it's for companies that have 61 employees. As we get through to January 2015, that's for companies that have 58 employees. And so on and so on and so on. When you get to less than 30 employees, it's broken down into the last 2 digits of your PAYE reference as well. And the reason for that is that the vast majority of employers in the UK have less than 30 employees. And therefore, by breaking it down to the last 2 digits of their PAYE reference, it means that they can spread the load of people auto-enrolling. However, in 2016, there will be months where there's going to be greater than 130,000 employees will have their staging date. All employers will be on board by the time we get to April 2017. How do you know your staging date? Well, if you log onto the Pensions Regulator website, tpr.gov.uk, or you can spell it out in full, thepensionsregulator.gov.uk, and if you go on to the section that says finding out your staging date, if you go through and enter your PAYE reference into that field there, press this button here, it will then go through and it will show you the actual staging date for your particular company. Assessing your workforce. What do we mean by assessing your workforce? Well, basically your workers will fall into one of 3 categories. And these 3 categories are eligible job holder, non-eligible job holder, and entitled worker. How do you assess your workforce into one of those 3 categories? Well, there's 2 thresholds you need to know about. You need to know about the auto enrolment threshold, and in the current tax year, that is set to £10,000. And you also need to know the qualifying earnings lower threshold, and in the current tax year, that is set to a value of 5,772. Once you know those 2 thresholds, you can assess your workforce. How? Well, workers will fall into one of these 3 categories. An eligible job holder is basically somebody in your workforce that's aged between 22 and the state pension age, and they earn above £10,000. Eligible job holders are the group that need to be automatically enrolled into pensions. What's a non-eligible job holder? Well, this is a little bit more convoluted. It can be anybody in your workforce, i.e. somebody aged between 16 and 74, and they earn between the 2 thresholds. So they earn between 5,772 and £10,000. Or they could be the youngest part of your workforce, i.e. age between 16 and 21, or the older part of your workforce, i.e. age between the state pension age and 74, and they earn above the auto-enrolment threshold. They earn more than £10,000 a year. This group of non-eligible job holders have a right to opt into the pension scheme. So you don't automatically enrol them, but they can request to go into that pension scheme. And if they do so, then both you and those workers will contribute into those pension schemes. Entitled workers. These are anybody in your workforce, i.e. they're aged between 16 and 74, and they earn below that lower threshold. So in other words, they earn less than 5,772. These people have a right to join a pension scheme, but you as the employer do not need to contribute into that pension scheme. How about reviewing your pension arrangements? You need to select something called a qualifying pension scheme. You can't just use any pension scheme. It has to be a qualifying pension scheme for auto-enrolment. And there are a number of rules that make it a qualifying pension scheme. One of those rules relate to auto-enrolment criteria. So under the auto-enrolment criteria, that means that the worker does not need to provide any information to the pension provider. So they don't need to tell them their name, their date of birth, their national insurance number, or any of that type of information. And in fact, they don't need to fill in any form whatsoever, and they don't even need to pick up a pen and sign anything, because they can get auto-enrolled without any activity on their behalf. Therefore, how does the pension provider know who these people are that need to be auto-enrolled? The employer is legally bound to provide that information through to the pension provider. So it's the employer that will go through and give the details of the workers that are being auto-enrolled. So the employer will provide the name, the date of birth, the national insurance number, the gender, the address, and all the other information that the pension provider requires. Also, as part of this auto-enrolment criteria, there can't be any barriers to people being auto-enrolled. So, for instance, it couldn't have an age restriction to say that people have got to be over 21, for instance, because what we knew earlier, when we said a non-eligible job holder, they could be aged between 16 and 21, and they have a right to opt in which case the pension scheme cannot preclude those people from auto-enrolling. If it did, it wouldn't be a qualifying pension scheme. There's other criteria that apply as well. There's things like qualifying criteria, and that means that it needs to be a bona fide type pension scheme. In other words, it needs to be a tax registered pension scheme. Most of them that you're going to choose are probably going to be UK based, but you can choose pension providers that are in the European Economic Area. However, various other rules apply if you choose such pension providers. There's also a set of minimum requirements. I'm not going to go into too much detail here other than talk about the minimum requirement related to the contribution levels. So looking at contribution levels, there's something called qualifying earnings. That's between the value of 5,772 and 41,865. And qualifying earnings are basically anything that an employee earns, such as salary, wages, overtime, commission, bonuses, statutory sick pay, statutory maternity pay. All of these build up to qualifying earnings. So if we're basing it on qualifying earnings, then the contribution levels will be 3% from the employer, 5% from the employee, making a total contribution of 8%. Remember, however, the employee can claim back tax relief, and in fact, they will only actually be contributing up to 4% into that. However, these percentages are not introduced at your staging date. They're actually being phased in. So based on qualifying earnings, from whatever your staging date is up until the end of September 17, the contribution level will be 1% employer, 1% employee. From the beginning of October 17 to the end of September 18, it rises to 2% employer, 3% employee. And from October 18 onwards, it's 3 and 5%. What if you have an existing pension scheme? Can you use it for auto-enrolment? Well, the question really you need to ask is it a qualifying pension scheme for auto-enrolment? If it is a qualifying pension scheme, then of course you can use that qualifying pension scheme to auto-enroll other workers into it. If, however, it is not a qualifying pension scheme, so it doesn't match the rules for a qualifying pension scheme, then of course you can't use that. The other thing you need to note, however, is if you've got people in a non-qualifying pension scheme, then you need to auto-enroll them into a qualifying pension scheme. Okay, if you've got a pension scheme and it is a qualifying pension scheme, but not all the workers are in that pension scheme, can you use it for auto-enrolment? Well, the answer is yes, of course you can. But I would ask the question, why do you have a pension scheme in place that only a subset of your workforce are actually members of? And the answer to that normally is that it forms part of the benefits package to those workers. So those workers are likely to be things like your managers, your team leaders, your directors and what have you. And indeed, you might be paying above those minimum contribution levels. And therefore, the question you need to ask yourself is, do you want to use that pension scheme to auto-enroll the rest of the workers into? If the answer is yes, then that's absolutely fine. Go ahead and do so. If you decide, however, that you don't want to do that, then you can choose any other pension provider, and provided they've got a qualifying pension scheme, you can auto-enroll workers into that pension scheme. There is one pension scheme, however, that is called NEST, the National Employment Savings Trust. NEST have a public service obligation to provide pension schemes to any employer that approaches them. So in other words, they have a number of qualifying pension schemes, and if you go through and you ask to use one of their pension schemes, they're guaranteed to accept employers to those pension schemes. There are some specifics associated with NEST. So for instance, at the moment it doesn't allow transfers in and transfers out of those pension schemes. However, it will accept all employers. It's accountable to Parliament through the Department for Work and Pensions. It's regulated by the pensions regulator, and it's a not-for-profit organisation. Communication to your workers. What types of communication do you need to provide? Well, it depends upon the category of worker. If you've got an entitled worker, you need to give them information to say they have a right to join the pension scheme, but you as the employer do not need to contribute to that pension scheme. If they're a non-eligible job holder, then you need to tell them that auto-enrolment is happening and that they have a right to opt into the auto-enrolment process. If you've got an eligible job holder, then you need to tell the eligible job holder that they are going to get auto-enrolled into the pension schemes, and you need to give them other information. You need to tell them what the contribution levels are, you need to tell them who the pension provider is you're going to use, and you need to tell them that the contribution levels in future years are going to increase to those levels that we discussed earlier. So where do you get this information from? Well, if you go onto the Pensions Regulator website, one of the tools they have is writing to workers about automatic enrolment. And if you select that particular tool, it allows you to go through, launch the tool, and then it will present you with these screens here. So for instance, one of the letters you need to send is to existing members of pension schemes, if that applies. In which case, it has a letter template. So this is a document, a Word document that you can download so that it has all the wording associated to this group of people. It gives you guidance on completing it, and it also gives you a printed version of that document. And if you go through this tool, that's one for those group of people, but there's also those for eligible job holders. So again, it has a letter template, guidance for completing it, and an example of that being printed out. And for your non-eligible job holders, it has the same sort of process, and it goes through for each of the letter types that you've got. And if you take the option to print it out, you will see, for instance, for your eligible job holders, this is what that letter will look like. So in which case, you don't need to create those letters. You can download those letters off the Pensions Regulator website. How do you automatically enrol eligible job holders into a pension scheme? There is something called the joining window, and the joining window is basically 6 weeks from your staging date. And in that joining window, you need to provide the information to the pension provider so that they can auto-enroll those workers. So you need to provide the details, the full name, address, gender, date of birth, national insurance number, and all this sorts of information the pension provider needs. You also need to give information to the workers. So for instance, your eligible job holders, you've got to give them that letter that we looked at a moment ago. You must give them this information that auto-enrolment is happening to them. And within that 6-week window, you need to activate membership of that pension scheme so they are active members of that particular pension scheme. Can workers opt out? They can't opt out of auto-enrolment, but once they've been auto-enrolled, they can then opt out of that pension scheme. How do they do that? Well, an eligible job holder can opt out. They need to use something called an opt-out notice. That opt-out notice is normally provided to the worker via the pension provider. So the employer does not normally provide opt-out notices. The worker has to go through and get those from the pension provider. And if they opt out in this opt-out period, and the opt-out period is a specific period of time, it's the latter of two dates. It is either the date that you gave them all the information about the pension scheme that they are being auto-enrolled into, or it's the date that they became an active member of that pension scheme. So let's say at the beginning of April, I gave them all the information about the pension scheme I'm going to auto-enroll them into. However, active membership was achieved on say the 15th of April. Then this opt-out period is 1 month from the latter of those two dates. And in my example there, it will be 1 month from the 15th of April. So the opt-out period is from the 15th of April to the 14th of May in that example. And if they opt out in that period, then the contributions they have made into the pension scheme are returned back to those individuals. If somebody opts out, then 3 years after your staging date, you'll go through the whole process again, and you will auto-enroll them back into the pensions, and again they then have the option to opt back out of that. The opt-out notice has some specific information on it, and here's some of the statements that the job holder will look at. So your employer cannot ask or force you to opt out. If you're asked to leave, please click this link here and tell us that you have been asked to leave the pension scheme. And it reminds you that you may be able to opt back in at some later stage if you decide to do so. So there are some quite specific notices in relation to the opt-out. How do you handle opt-in and joining requests? Remember, a non-eligible job holder has the right to opt into the auto-enrolment pension scheme. So in which case they need to provide you with an opt-in notice. The opt-in notice is not a formal document. It can be an email, it could be a letter, and what have you. So long as you can identify who the eligible job holder is, then you can use that as the basis of opting them in. Entitled workers. Well, they have a right to join a pension scheme, so therefore they can give you a joining notice. This joining notice, again, it's not a formal document. It could be an email, it could be a letter sent through from those workers. What are your ongoing responsibilities? You've got to collect the contributions from your workers, you've got to add your own contributions to it, and you've got to hand those across through to the pension provider either by the 19th of the month if it's a non-electronic payment, or the 22nd of the month if it's an electronic payment. So it's very similar to the way that you hand the cash over to HMRC. You need to keep records. You need to keep records for up to 6 years. However, if you are using Opera 2 or Opera 3, then the software automatically maintains the information for that amount of time. And also you've got to manage the opt-outs, and you've also got to manage the opt-ins for those individuals. Can you postpone auto enrolment? Well, the answer to that question is yes, you can. You can postpone it for up to 3 months. So if at your staging date you're not ready to go through the process, well then you can postpone it for up to 3 months. If you postpone, then you need to issue a postponement notice to the workers to tell them you are postponing. And that postponement notice will have a deferral date, i.e. the date at which the postponement ends, and in which case the date at which you've got to take up your obligations to carry out the auto-enrolment process. Do you need to postpone all of your workers? Well, the answer is no, you don't. You can postpone certain groups of workers. So let's assume that your workforce, 10% of your workers are in a monthly pension, are in a monthly payroll group, and let's say 90% are in a weekly payroll group. What you might decide to do is to postpone the weekly group for 1 month. And therefore at your staging date you might go through and you might auto-enroll the monthly group of people, and then 1 month later you then go through the process of auto-enrolling the weekly paid group of workers. You have that sort of flexibility in there. What about new starters? When you take a new starter on, do you need to auto-enroll them immediately? Well, the answer is no, you don't. You can postpone for up to 3 months. And in which case, if you postpone for up to 3 months, you have a sort of probation period with those workers before you then have to go through and auto-enroll. That also has some benefits if you've got seasonal workers. So for instance, if you're a shop and you're taking workers on in November to cover the Christmas rush, then do you need to auto-enroll? Well, no, you could postpone for 3 months. So in which case, they join you in November, they work throughout December, which is the run up to Christmas, and you might even keep them to help you with the January sales. Provided they don't work greater than 3 months, then you don't need to auto-enroll those workers. Workers becoming an eligible job holder. How can a worker become an eligible job holder? Well, there's a number of methods. It could be, for instance, they're 21 and they just reached the age of 22, and therefore, based upon their age, they could become an eligible job holder. Do you need to auto-enroll them straight away? No, you could postpone it for up to 3 months. Another reason why somebody might become an eligible job holder is if their salary increases. It takes them above that £10,000 a year, and in which case, therefore, they can be auto-enrolled. However, you have the right to postpone it for up to 3 months. So in summary, you need to know your staging date, and you can get that information from the Pensions Regulator's website. When you get to your staging date, you need to go through and you need to assess your workforce into one of those 3 categories. You need to make sure you've got pensions in place that you can auto-enroll workers into. And at your staging date, you therefore need to go through and you need to make the communication through to those workers to tell them about the auto-enrolment process. And you need to automatically enrol eligible job holders into those pension schemes. And within 5 months, you need to register with the pensions regulator to tell them that you have done this. And of course, both you and your workers need to contribute into those pension schemes, and those contributions need to be handed across to the pension provider in the timescales that I discussed earlier. Okay, if you go onto the Pensions Regulator website, you'll find they've got something called an auto-enrolment timeline, and this is quite useful. Go onto the website, have a look at this, create your action plan for auto-enrolment. It will ask you to enter your staging date, and then it will create your plan for you. And the plan shows you what you need to be looking at in the timeline going backwards from your staging date. So my staging date is set to the 1st of January 2017, and what it's saying is, well, 18 months before you should nominate a point of contact, you should find out your staging date, and you should develop your initial plans. When you get into between 12 and something like about 4 months before, you need to make sure that you've got your pension in place. And when you get to your staging date, then there's a range of things you need to do going forward. So this plan is quite useful because it describes the process that you need to go through to set yourself ready for running auto-enrolment. Okay, that concludes the first part of this video. Thank you for watching this, and I hope you found the information useful.